Did you know that in a letter of credit, banks don't care about the goods at all? They only care about one thing: documents. Today, let's understand documents in a letter of credit, explained in very simple words. In trade finance, the buyer and the seller are usually located in different countries. Because of this distance, the bank is not physically involved in the shipment of goods and cannot see or inspect the goods itself. So instead of goods, the bank relies on documents. These documents act as proof that the seller has shipped the goods exactly as agreed in the letter of credit. That is why banks always follow one simple principle in trade finance: we deal with documents, not goods. If the documents are correct, the bank makes the payment, regardless of the actual condition of the goods. Now let's look at the main documents usually required in a letter of credit. First documents that is required in an LC is commercial invoice. The commercial invoice is the most important document in a letter of credit. It is issued by the seller and shows the full details of the transaction, such as the buyer's name, seller's name, description of goods, quantity, price, and payment terms. For the bank, the commercial invoice confirms what was sold, to whom, and at what value. If the invoice details do not exactly match the LC terms, the bank may raise a discrepancy. The bill of lading is a key shipping document issued by the carrier. It serves three main purposes. First, it proves that the goods have been loaded on the ship. Second, it acts as a receipt of goods by the shipping company. Third, it is a document of title, which means it represents ownership of the goods. Banks carefully check the bill of lading because it confirms that the goods were shipped as per the LC. The packing list provides details about how the goods are packed. It includes information like the number of cartons, type of packaging, weight, and dimensions. This document helps customs authorities, transporters, and the buyer to handle and identify the goods easily. Although it does not show the value of goods, it must still match the LC terms exactly. The insurance document proves that the goods are insured during transit. It protects the buyer and the bank in case the goods are lost, damaged, or destroyed while being transported. Banks check whether the insurance amount, risks covered, and dates comply with the LC conditions. Without proper insurance, the bank may refuse payment. Apart from the main documents, a letter of credit may also require some additional documents, depending on the nature of the trade. All these documents must strictly match the terms and conditions mentioned in the letter of credit. So in simple words, documents are the heart of a letter of credit. If documents are correct, payment is made. If documents are wrong, payment can be rejected. If this video helped you understand trade finance better, please like, share, and subscribe to Money Behind Trade for more simple banking explanations.